And basically it's a top-down type of view. So if I ask you a question about the market, is a share able to move the market?
One share, yeah.
Is MTN able to move the telecom sector?
Potentially, probably,
Yeah. Why?
Which one? VAT moved the market last
Yeah.
year.
There's only about 3 or 4 shares in that sector, but can MTN move the JSE All share? No, definitely not. Okay. So the model of the story is most brokers, or a lot of brokers, actually tend to just look at the stock that they're interested in, and not look, and that's a bottom-up approach. That stock can't be moved by the market, by itself. Can't move the market by itself. Okay. So what happens is that it's much better if you have a much better potential of succeeding if you look at the top end of the market. In other words, what is the JSE doing? What is the Dow doing, for example, and what is the FTSE and the DAX doing? For various reasons. Some of those are financially based indices. Some of them are industrial. Thank you. Okay. So if you want to know what's going to happen on the JSE All Share, you kind of want to be looking at the DAX. In terms of industrials anyway. Where would you look for the resource sector? Ooh, it's a little bit tricky, that one, eh? No, they don't mine, eh? Although there's a couple of our miners that are duly listed there.
China. Australia.
That's one of them, the ASICs, okay?
Nikkei.
Shanghai.
Shanghai.
Okay, the Shanghai. So if you are, who's trading resi, the resources at the moment? Anybody in the resources? I'm allowed to ask that question, I'm not sure. Is that okay? Sure. You're not telling me what you're in, so that's okay, okay? Alright, so if you're trading the resources sector or something in the resources sector, surely you should be looking at A, the commodities, okay? Probably the dollar, what it's doing, okay? And then thirdly, the Shanghai and the ASICs. Okay. Canada also, to a certain extent. I mean, let's face it, majority of their exchange is resource based. Okay, I haven't really looked at the correlation there actually, to be honest with you, because they're more of a IPO type listing of exchange. But they usually mine offshore, outside of Canada.
Oil.
Yeah, oil. So it's mainly oil, and slightly there's some gold and some other precious metals, but it's very limited. Yeah. So if you want to know what oil's doing, what are you going to do? Yeah. All right. So having said all of that, okay, it doesn't sound quite technical, does it? I don't know. You tell me. It sounds a bit more like fundamental, right? Okay. But the point is that there's a correlation either way. So as far as I'm concerned, fundamentals are important, but only in the perspective that they give you a mental fund. I quite like that. Okay, so do you see where I'm going with that? Yeah. Okay. Now let's have a look how we can turn it around. Okay. That's as far as I go with fundamentals. It's a mental fund of what's going on in the market. Okay. But if you want to know when to time the market, are fundamentals going to tell you when to do that? No. Okay. So, important thing for me to note as a technical analyst is I want to have my mental fund at prime. Okay. I must be at the top of the game with my mental fund. But in order to time the market, I use technicals to do that. Because fundamentals, when do you get the results of fundamental analysis?
Quarterly, semi-annually.
Okay. But how are you looking at the report?
Oh, makes sense. Late.
Historical. Yeah. Okay. Thanks, Buddy. Well done. Right. So if you want to be a Warren Buffett, you're buying on value, then of course mental funds are going to be important. Okay, you have a mental fund of what's going to happen in the market and value trading rather than actually trying to. You are going to try and time the market, but you're not necessarily just trying to catch a swing trade. You guys familiar with swing trading?
Yeah.
Okay, well that is. All right, it could be a period of, was that a no?
Yeah, there's a no.
That was a no. Okay, so give me a couple of seconds to explain. Swing trading basically means that, let's say there's an asset swap in the market, and this happened at the beginning of this year. Basically, the market moved out of resources into retailers. Okay, so in that instance, you've got about a 3 to 6 month swing trade window, which means the market swings from out of the resources. Okay, so if that was resources, it swings the other way into something like retailers. Okay, that's a 3 to 6 month window. Sometimes shorter, but usually when it's something big like that, it's where it's a whole entire sector, it's something massive, it's 3 to 6 months.
So is
And you can take a look at your charts. Go back to January. I was on CNBC earlier on with technically fundamental and talking about the swing between the resources, get out of resources or short the resources. Do you guys understand short selling? Okay. Does that make sense? Yeah, happy with that?
Yeah.
Okay, swing trading. Sometimes it's very short. I mean, you can even go from minor sector to minor sector, not a major sort of asset swap like this. In that case, then you're looking at about a 3 week swing trade. Okay. All right. So technically speaking, what are we going to focus on this morning? You've already alluded to there being a lagging indicator or lagging information, and that's fundamentals in my opinion. Okay, which is your quarterly reports, your biannual reports, annual reports, etc. All right. But there are also lagging indicators in the market. All right. And I've broken them down here quickly so that you guys can have a look. The lagging and trend indicators are the MACD and the moving averages. I prefer using an exponential moving average. Anybody know what the difference is between a simple moving average and an exponential moving average? Okay, have a go, Warrick.
I think exponential weights the most recent dates first.
Okay, excellent. So it takes an average of the number of days. It's like a batting average, right? How many home runs did you hit, or how many runs did you hit in cricket? Works out the number of matches, divides it by number of matches, and you get your average, right? But that's simple moving average. Exponential moving average would take, if let's say it's over 10 games, take the last 5 over preference over the first 5. Happy with that? It's exponential. MACD, you guys familiar with what the MACD does, or what it is?
No.
Well, they're not too sure. Okay, just in summary, this is in the notes, it does break it down a little bit, okay? MACD stands for moving average, convergence, divergence. Okay, now what do you think happens when convergence happens? Okay, we'll get there. We're so you're ahead of the game here, John. Okay, there we go. Warrick's got it. Okay, so very simply put, if this is the moving averages, all right, and I'm just using for ease of the way. Now that should go something like that. If that's your chart, and this is the MACD. Basically, the MACD is it's got a middle line, which is 0. And when the moving averages are above each other, the MACD is above the 0 line. Okay? When they cross over, the MACD is going to cross and hit the 0 line there. And obviously then the MACD remains below until such a time that they cross again. There it is. Okay? Then above the line, crosses again. Okay? And that's pretty much what the MACD is doing. Now there's 2 lines on the MACD usually. And usually that just shows you the distance. So in this case here, they're far apart because the moving averages are far apart. Okay, there's divergence. And then as they get close together, or you're going to go something like that. Okay, something along those lines. So as they widen, as the MACD widens, so does the moving averages here. As they get close together, so do those go close together. Okay. I don't think it's entirely important, unless you want to go and write your technical analyst exams. Okay, and there are those exams. I don't think it's that important for you to know the definitions. So I'm not going to cover them. If you want to know more or less what the definitions and exact wording is, etc., Wikipedia. Okay. I think what's more important for you guys to know is how to use the indicator. Okay. You can always go look the other stuff up, but how to use it, maybe not as much. Okay. So leading indicators, we've got oscillators, the slow stochastic, the RSI, candle patterns, chart patterns, divergence, and then the trend lines. Okay, trend lines not so much probably a leading indicator, but it gives you an idea of exactly where the market is. Probably going to go in a high position when it's resistant, getting at resistance, low position when it's getting at support. So it does tell you a little bit something about what may take place, hence leading indicator. Okay, momentum indicators overbought, oversold, on balance volume, right? And then Fibonacci retracement extensions and price relative. Anything up there that you guys don't know?
Elliott wave.
You don't know Elliott wave?
I've heard of it.
Heard of it?
But I don't know it.
Okay.
I don't know her.
Yeah, I don't know. I've heard of the Fibonacci retracements, but I haven't
Okay.
actually seen them.
Alright. But everything else you relatively okay with?
I don't know how to use any of those bottom ones.
You don't know how to use overbought, oversold, on balance volume, Elliott wave, any of those?
Yeah.
Great, that's why I'm here. Alright, so just to cover quickly, okay, the MACD, that's basically what the definition is. But what I want to do is I just want to give you guys an indication of how you can, how best I use it. Alright, if we've got a chart doing something like that, and we've got moving averages doing that. There's your zero line. Okay, so let's go get this. Alright, so we're gonna be coming from a low base here, above the line. Moving averages are gonna cross, could do something like that. Cross over there. A little bit off from our chart here, but that's alright. Cross back up over there. And move up like that. Now, a very simple way of being able to use the MACD is if the MACD crosses, if the MACD is already up, crosses back down, and crosses back up like I did over here, in line with the moving averages. Okay? You could look to buy over there. Okay? That's a very simple way of using the MACD, but I'm going to show you guys a little, something extra a little bit later on when we get to divergence, about how to use the MACD in a much more effective and more market intelligent way in terms of deciding reversal patterns and continuation patterns. Okay, because it's vital if we're talking swing trades like what I mentioned earlier on. If you want to catch a swing trade, you want to know more or less 80% of the correct that there's a reversal coming. You guys would be happy with that, right? Okay. Alright, the moving averages, exponential is the explanation again. I usually use in a short-term period. Anybody trading intraday here? You guys buying, selling the same day? Not really, yeah?
Right there.
Oh, you?
Yeah, we tried that.
You're trying it.
Killed.
It's like 0.5 in and 0.5 out.
Yeah. You've got to have a massive day on intraday type trade. Okay. Unless you're trading the all share, the top 40 index.
Yeah.
Okay. Then it's a different story. So you're not really going to be using 3 and 8, although there is it's a very short period. That's a 3-day and an 8-day moving average. Okay. Obviously, if they crossover either heading negatively or positively, then it's a buy potential, right? Then also the 3, 8, and 50, 10, 20, 50. I use a combination of at least 4 moving averages. In fact, usually if it's equities, it's going to be 5. Okay. And the reason being is that they also act for me, and I've done this kind of research for 5-6 years. So the moving averages act in some instances as resistance.
Yeah.
And generally when it's bull market, well, if it's bear market, it's as resistance, if bull market is as support. Okay? But they also give me a fantastic, what I call a power crossover. Okay? And if you see that, which I've traded on some penny stocks recently, Westcoal and Pointing. I don't know if you guys are familiar with them. You probably can't trade them because they're low volume now. Okay, low liquidity, so they're not on your top 140 listed stocks. Some of my trader. Okay. But anyhow, I mean, it resulted in a move from 80 cents to 160. Can't complain. And that was in about 8 weeks. Right? So when they happen, they happen. All right, so moving averages, simply put, the ones that I use are a combination anyway of 3 and 8, 20 and 50 EMA. All right, and usually the triggers are 3 and 8. And then the 20 is usually support. And then the 50, what's the 50 going to be? What's the 50 EMA going to be?
Resistance.
No, it's a, well, I'll call it a signal.
Generally, I would say it's my ultimate stop loss. Okay, that's my decider to get out of run out hell for the hills. Okay. One additional one that I like to use is the 89-day moving average. That's generally for if I switch this now from, so that's one combination. Okay, it's a very short-term combination, usually for intraday, the Aussie, the Forex, that kind of stuff. The other one would be, and this is much more maybe for your guys' palettes. Okay, 10-day, 20-day, those are the triggers when they cross up. Obviously with supporting technicals as well, they're not, you're not just going to take cross and buy or sell. Okay, so it's 10 and 20. The 50 becomes your support, 89 becomes stop loss. So those there are triggers. Okay, so that's your entry, if you want to call it by another name. Okay, then your support is going to be the 50 EMA. 89 stop loss. The 89 EMA, by the way, also can work very nicely as a trend line, okay, as your trend support. In other words, your trend decider. So whether you're going to be bullish or bearish can be determined by the 89 EMA. Okay, remember it's definitely EMA, not SMA. Okay,
Sorry.
So that's also trend, yeah.
Do you find that there is actually a very big difference between EMA and SMA? Because I've been reading a lot and then people say like, it's like personal preference. I guess technical analysis is very subjective.
Yeah, I just found, well, I don't know, obviously it's all about formulas, right?
Yeah.
So yeah, the exponential moving average is definitely not, it's objective.
No, I'm saying
but the use of it
yes, is
subjective.
Yeah.
Okay, yeah. So I've just found that the EMA is a little bit more, for me, it's been more reliable. Especially using the 50, the longer term moving averages. And I'll tell you why. It's pretty much like I said to you guys earlier on, the top-down approach. What's going to move the market? The share, sector, or is it going to be an entire market moving in a direction dictates what's going to happen pretty much across the board? You can split it in certain camps, but pretty much if the market's moving up, what's going to happen to most of the shares? They're going to go, right? The same thing happens with this, is that there's Big Brother up there in the sky, okay? Big Brother likes using exponential moving averages, okay?
Actually, when you say trigger, do you mean that the 10 and the 20 are crossing over MACD 0, or are you saying the share price goes through one of them?
No, it must be the EMA's crossing.
EMA's crossing.
It's either 3 and 8 and the 10 and 20 are crossing up, depending on where you're sitting, okay? So yeah, use the 10 and 20 as trading pair for the swing trades, use 50 and 89 as trading pair to also determine direction, as well as your support and your stop loss, okay? Slow stochastic. Who's trading with a slow stochastic? Anybody? Be honest. Okay. In brief, this one's very easy and is very similar type indicators. The RSI is pretty much used in the same way. So what happens is we have a 0 to 100. Okay, share does something like this, like that. The stochastic also has 2 lines. So usually what's going to happen is the stochastic will do something like this. Alright? What's going to happen, the most important thing to note about the stochastic really is that you're going to have, well, there's many ways of using the stochastic with RSI. Anything that's an oscillator, okay? Anything that's going to go between 0 and 100, okay, in terms of levels. What ideally you should be doing is looking at something like this. Remember, there's a 0 and 800. The higher the level of the stochastic, what's happening?
It's going to.
It's looking at overbought position. Okay, momentum's been extremely high. So what we usually do is you can either take a 75 or a 70 level or an 80 level, depending on how conservative you want to be, and we say at that level we decide it's overbought. Right? And where would you want to put your oversold level?
About 40.
30, 40.
Well, if it's 80, if it's 70, 30. Well, that's just
Okay.
at least what I've read.
I would go, if we're going as high as 80, I would go, I want to know, extreme, eh? I think 80 is quite high, it's very conservative.
Okay.
Or extreme rather, very extreme. So I would go, you have to go the opposite, 20. Okay, so where are you going to buy?
20.
Yeah, we're going to buy along that side over there. In fact, you've got 2 buy points. There's one, and there's one. Happy with that? Selling?
80.
Yeah. Presumably you went in there, and ideally you would have actually sold somewhere around here. Okay? Would you have gotten back in over there?
No.
Yeah, some of you guys would have, eh? Because you left money on the table. Damn it. Yeah. But interestingly enough, there's another pattern here. Can you guys recognize it? Slightly slanted.
Head and shoulders.
Double top. Thank you. Double top. Alright, it's slightly slanted, but I'll take it, eh? Right, there's the top, there's the top. There's the neckline, we call that the neckline. Okay, and usually to determine the downside of this, we're going to cover this a little bit later, but while we're here, you take from the low, which is the neckline, to the high, and then you just extend that down. Target should be about there. Okay, if you wanted to short it. Yes.
Okay, I'm just looking at this, and then when you have a double top, and then you look at your
Stochastic?
your actual slow stochastic, because
Yep.
I've been practicing how to say that.
Okay.
So, like, I just want to find out if the momentum is very high. Is it safe just to come out, or because sometimes I've seen that there is a double top, it goes down, and then
Yeah.
immediately starts a new rally out of that.
Continuing
almost.
that. Okay. That is that's unfortunately the trump card with any of these oscillators. Okay, is that they can stay low for a very long time and they can stay high for a very long time. So this could have continued. This could have continued like that, but obviously the chart would have been a little bit different. But this could stay up here, and I've seen some charts, some stochastics there, they've stayed up there for months.
Mass.
Okay? Because what's happening is that the market is, or that particular instrument, or equity, whatever, is so strong, the momentum just keeps pumping on. Okay? It never gets a chance to move away from being overbought. Okay, so that is a bit of a Achilles heel, right, for any of the oscillators. Okay, but I'm going to show you a way a little bit later how to use the stochastic RSI, anything like that, slightly differently. Even the MACD, all of these indicators by using divergence. Okay, as a opportunity to look at if the market, to confirm if the market's just going to correct, or if it is actually just going to, if it's just a pullback. Okay, or a reversal. Any questions on that? Guys happy? Relative strength, same story. So I'm not going to read you all it's the same, exactly the same thing, basically said the definition slightly different. It's an internal strength indicator on the stock itself. Okay, so it's the price movement compared to the price over a period of a couple of days or whatever. Okay, the period. But you use it exactly the same way. Okay? How to apply, alright, so we've spoken there, 70-30. Candles. Alright, who's using candles? Bars.
Candles.
Okay. Why am I using candles? Don't know how to use them. Oh, yeah, okay. Good timing there.
Talked
Talked about timing this morning, yeah. Here it is, eh? Here it is.
He was in the elimination
I was experimenting with candles during that time.
No, it wasn't working out too
But I'm
much.
going ahead to learn more about candles. You know,
Fantastic. It's good. And I'll tell you why. Big brother. It's as simple as that, okay?
Big brother.
Big brother's the market out there.
Oh,
Okay? Because let's face it, there's two types of psychology that you need to know when you're in this business, okay? The one is your own, the trader psychology or investor psychology, you. And the other one is? That's it. Okay. Why do you think these things, resistance lines work? Why does support work?
Someone else is using it.
That's it, self-fulfilling prophecy, okay? Okay, that's market psychology. Alright. So exactly the same thing happens, not to say that there's 99% of people using candles out there, but listen, it only takes like 65, 70% of the people, or even only 35% of the people in the right funds, okay? Big brother and his cousins, sisters, and brothers and everybody, to be using or seeing some pattern that they've seen on the market, and guess what happens?
Would people use technical analysis in funds? Because
Sure they will, yeah.
Because maybe I was confused because of the time frames. I mean, I suppose it works over any time frame, but it would increase your frequency of
It would.
trading.
It
So
would.
if you're working with a big fund, it makes it quite difficult.
Yeah. Look, generally, it depends on the kind of fund again, okay? If you're looking at a 5-year type or 3-year type, then you're probably going to be watching weekly charts, not daily charts. Just a matter of changing the time frame. I mean, Warren Buffett, he's going to watch monthly charts most likely. Okay? If not, if not biannual, 3 months. Okay? But the point is he's still watching charts. Whether that's his final decision is probably not the case. He's just using it to time. Yeah, he chooses shares on value, but he times it when the prices are undervalued. And how are you going to determine that? Well, I suppose you can work it out historically. You can also just see it on the chart. It's fairly, I mean, that will take you 2 seconds. See it on the chart. Versus sitting with a calculator, pulling out all the years of reports and trying to work it out that way. Or use software, I suppose. But still, take you a lot longer than just pulling up the chart. Alright, so candles, gravestone dojis, dragonfly dojis. Not too important, but certainly they can have their moment in time. Okay? And that's usually on the down. Okay. Actually, before I even get into this, I'm going to explain to you how candles work. Okay, let's do that. Because I think I'm getting this vibe, you know? The candles are. Alright, so what happens with a candle, guys? We open over here. Okay? This is an up candle. We open over there. During the day, the share price moves down a little bit, moves up a little bit, and closes there. Okay, happy with that. This is an up day. Okay, so we opened at, let's say, 1 Rand. We went down to 95 cents. We went all the way to 1 Rand 10, and we closed at 105. So that's bar charts. What happens is that we open over here, remember? So that's the open, that's the close. Always an up day because it closed higher than it opened. So what happens is all we do is we close it, close the block. And that's usually a green candle. I don't have green in it. But it's an up day. And then the down day is just simply open there, close there. Okay, and then we close the block. Simple now, eh? Okay.
How does that help?
How does that help? Okay, when you get a bunch of candles together, alright, you're going to get something like this. It's called a graveyard doji, okay? I'm just not putting the candlesticks in, alright? The wick. This is called the wick. That little bit at the top, just like a candle. We were talking about candles earlier. And this little thing at the bottom here is called the tail. Alright. How this works is that's like an up rally, and the next minute we have that little oakie there. Now that's a gravestone doji or graveyard doji, okay? Because it looks like a gravestone. There's the piece of ground and there's the gravestone standing up. What does that mean to this particular rally?
It's dead.
Finished. Alright. In the next minute, the next couple of days, the chart heads down. Right? Obviously you have the reverse. So we just need to swap candles. We're just going to continue on this one. In the next minute we have a dragonfly doji is also usually at the top, but we need to use a black pen for this because it's actually neutral. Dragonfly doji is like this. See the difference? It looks like a dragonfly. Okay, wings popped out, got a head, got a long tail. Dragonfly doji.
Does this work on the up and the down?
Yeah. Well, there are various ones. There's bearish and bullish. Okay. So gravestone is usually bearish. Dragonfly is usually, well, it can be a bit of both. Depends where it is on the chart. So in this case here, it's bullish. Okay. Especially if we had a green candle, I'm going to use the blue one. Because that combination there, those three candles there, is usually called a morning star. Okay. Especially when it has to be, and then this one here, this combination here is called an evening star.
Which means it's over.
Correct. It's night time, finished. Cheers. Okay. Morning star. It's a rising star. Okay. And that's a setting star. Right, so what's going to happen here? We're going to have a bullish, we're going to have a reversal here. Okay? Same thing over there, but that's a bearish reversal, bullish reversal. It should. These work about 75% of the time. Why? Because of the market. Okay. And in addition to this, it's especially useful if you have something that comes across like that. What might that be?
Moving average.
Which one?
EMA.
Yeah, 89. Okay. That you write yourself a check on. Just that stuff there. Because where are you going to put a stop loss here?
There you go.
Don't even put a stop loss, you're making money.
Pretty much. 80% of the time, the thing's going to reverse. Okay. If you really wanted to put a stop loss, it's literally going to be about 2% below the 89 line here. Okay. Alright, happy with that. Morning stars, you've seen that now, eh? Which one's a morning star?
Bottom.
Bottom. Okay, because it's rising. Evening star? Falling. Okay? Bullish and bearish engulfing. Does anybody know what that is? Jonas? You look like you have a bit of muzo. Let's have a go. Come draw it for us. Okay, let's go with the bearish engulfing. First, you can just use the bottom of the chart here.
Okay, bearish engulfing. Well, let's say for argument's sake you have channels.
Right.
Okay, and the next one you have some. You'll start here and it's a Marabusha.
Okay, great, man.
And then
So that's
a bearish.
bearish engulfing. Okay.
Just that right out bearish.
Exactly. All right. So usually, guys, it's not always as big as this, but usually what ends up happening is you have a situation where you have a good candle, usually on an upward rally like that, and then whatever happens the next day, the negative candle engulfs the blue candle. Okay, hence the engulfing. Okay, and the opposite happens with the bullish engulfing. Not as widely sort of supported, okay, in terms of the market psychology, but it's there. And it's it's an extra tick to say yes, I should go in, or yes, I should get out. Okay? And the last thing is hammers. Very close, very similar type of pattern to that. What's this again?
Dragonfly doji.
Yeah, somebody's paying attention.
Because I use them.
He's got. Okay, Dragonfly Doji. Very much like that. Usually it's going to be a situation where you're going to find something like that. Right, there's them. I mean, that's plain sight, right? You can see that straight away. Why it's called a hammer. Okay. Right, so those are a couple of very important ones. You can see them again on the chart here. Dragonfly Doji, it should actually have a little head on it. Gravestone Doji. There's your morning stars. That's a perfect morning star. What happens if one of these aren't one of the bodies? Now that's the body of is where the colored in section is, right? What happens if they're not equal? Does it still count?
I say it still counts.
Okay. If you can get something that looks like that, the one on the left, that's like a no-brainer. Okay, because everybody, even the fundamentalists, are going to see that and say, "Wow, there's a reversal." Okay.
Everybody's going to be jumping.
Everybody's going to be getting into that. All right. Yeah, you can see it's slightly mixed. Okay, but that's an evening star. With a spinning top as well, if you want to know a few other textures there. There's lots of candle patterns to it. These are the most important ones.
Doesn't the block reflect opening and close?
Yeah.
So then, surely to go green, it can't, because on the red on the left, it closed down,
Yeah.
and then how can it be green?
It opens lower.
Because it opened lower the next day.
Yeah.
It's like it had a gap down and it opened and it closed up. And that's the first sign to say, hey, hang on, what's going on here? Because usually remember a candle pattern like this has seen a hell of a lot of downside, eh? Usually. You want to at least see about a 60, if you know Fibonacci's retracements and that kind of thing, you want to at least see a 60% drop. And then find something like this at the bottom of the page. Okay? I'm going to show you a finished pattern a little bit later.
Formations aren't always as perfect as that. In other words, it could be 4 candles as well.
Yeah.
The morning star, might even be 4 candles.
Yeah, it can be, eh?
Yeah.
Sometimes you also, the fourth candle can be a red candle.
Yeah.
This one here can be a red candle. So this is a morning, this here is basically, very much like a morning type star, but definitely a hammer, okay? This next candle could be a red candle. Doesn't mean that it's incorrect, okay? It's the next candle that determines what the story is. As long as it hasn't broken below this level here and closed there, I'm happy to stay in that. So there's some more indicators here of how it looks. Shooting stars, that's an upside down hammer, that's the inverse of a hammer. It's a shooting star. You're going to see those a lot. There's the gravestone or graveyard doji, another shooting star, doji candle, spinning top, bullish hammer, very shooting star. All of them are reversals.
Just a question, you compare things as to the close, so, because there are gaps there. You know what I'm saying? If you look at the shooting star and the gravestone doji, there's a gap between the two closes.
Yeah.
Now, if the wick
That's
goes
ideal.
through the gap,
That's ideal.
if the wick goes through.
No,
You know what
it is. And that's
I
another
understand
type
the
of
gap,
technical,
I know,
to understand
I know
the gap theory.
But
Okay?
what I'm saying is that if the wick does go through, it's
Yeah.
still fine.
Yeah, yeah,
It's just ideal if there's a gap.
yes, because that's an exhaustive gap. Okay, so some of you guys are familiar with exhaustive gaps. Usually a gap at this point here would tell you it's an exhaustion. The rally's now over as well. And then the shooting star, the gravestone doji, just tell you this and it's confirmed.
Okay, it's the first time I see a bearish shooting star. But my interpretation is that buyers pushed it up until it reached a particular point where they were no longer willing to pay for that. They pushed it down, and it's a sign that the actual stock has run its course.
Exhausted.
Yeah, it's run its
Correct.
course. Like, because I've never seen it before, but that's how I'm just interpreting it.
Okay. You know what usually happens in this situation? The fund managers and the brokers are selling here, and Joe Soap's buying here. Unfortunately, it's usually what tends to happen, because listen, let's face it, brokers, brokerages, fund managers have to offload to somebody.
Buyers, first sellers, buyers.
You need buyers at the top and the bottom of the market, buyers and sellers. Okay, so chart patterns, you guys sounded like you were a bit familiar about this a little bit early on. I'm moving quickly, guys, because we don't have too much time, right? And I want to leave a little bit of time to show you examples. Okay, just now, questions. Double top, double bottoms, they're easy. Okay? Make sense? Okay, there's the bottom, top, top. They're not always symmetrical, like, good pair of Hooters, okay? You still don't mind the Hooters, okay? Even though there might be a little bit of asymmetrical stuff going on there, right? So what happens is we draw a neckline there, we draw a neckline there, okay? And then we go to the highest point from the neckline, and what are you going to do? Just extend that to the bottom, and that's a loose interpretation of the target. Doesn't mean it's going to stop there, although it may. Usually it actually does. Usually what ends up happening is that you find something like this, and then there's a second fall.
That's the question with the,
Okay.
with the double top.
Yeah.
So it dips down, right? For example, for the double top, and on its way up, if it stabilizes a bit and then shoots up, is it still considered a double top?
No.
So it has to go directly back up. There can't be like a tiny little range. Do you know what I'm saying?
Do you mean from over here?
No. I mean from the middle, bottom, there.
Yeah.
So on its way back up,
Yes.
it kind of slows, stable, and then shoots back up. But I mean,
It continues up.
Yeah. Do you know what I'm saying? So that it's not exactly up. It might.
Yeah, but you've got to wait for the break of the neckline. You're not going to sell it over there.
No.
You want to wait
I
for it
know.
to sell over there,
But
right?
what I'm saying is, in the middle, on its way up to the second, essentially the top line's like a resistance, right? And it's
Yes.
trying to break through on its second round.
Okay.
But before it hits there,
Yes.
it kind of stabilizes for a bit, and then
And then hits the
it
resistance.
bounces back down.
Yeah,
Is it
I
still
still count
fine?
that as
Okay.
qualifying. Yeah, so as long as it doesn't. It's over a period of time.
Yeah,
You've got to just take a little bit of a trader's license.
Yeah,
Okay.
project license.
But yeah, no. If it fiddles around in here a little bit, that's not too much of an issue.
Okay.
As long as it's keeping mainly to trying to either make a new high, because the best format in the bearish side here is that it makes a new high on the second level
Okay.
and then breaks. If that happens, then you're generally going to find that it falls much more than what the original distance is. Okay, usually that's the case. You have the opposite where it'll go makes a higher high first and then a lower high, something like that. Okay. Usually this has a good chance, just as good a chance of hitting target, but not necessarily to break the target. Okay. And then exactly the same thing happens in these here. You're going to take the distance to the bottom.
And when you say distance, you just mean the change in price, essentially the price move.
The price from the low, in this case, to the break line, to the neckline. Okay, so that's neckline. Yeah, so you're working that out, and then you're just going to add it to there, extend to there. This it wasn't very clean, but something like this happened on is it Aspen? No, just something we did this week. Either Aspen or what was the other one? First Rand. It's First Rand. I'll show you that a little bit later. Okay, so there's double tops, double bottoms. Okay, and ideally you want to see these at the front. They're right at the end of a fantastic rally, okay, in case of double tops, and at the end of a very strong correction, okay, double bottoms. Alright. What else have we got? Head and shoulders, very similar. Very similar. Head and shoulders is the bearish pattern. Neckline. And the head and shoulders works like this. Left shoulder, head, right shoulder. Okay? Just in case. Didn't make too much sense there. Alright? And how do we work out our target here?
Is the top, it's the distance between the head.
The head and the neckline. Okay? Alright, so it's there, to there. From the break, eh? Target. And again, usually in line with a very nice rally, okay? And what tends to happen, guys, is you have a combination of things taking place in a chart like this. What are we going to find at this point here? What candles are you going to see there? We've just spoken about them.
Evening stars.
Evening stars, done already, what else? You might not see an entire pattern, 3 of them. What about just one on its own?
Graveyard.
Okay? Graveyard doji,
Shooting star.
shooting star. Right. When you see those combinations of things, you just tick. Booyah! Already? Okay, you got it. You got it. Alright, head and shoulders reverse. It's a reverse head and shoulders. It's easy. It's exactly the opposite. Okay? Now it's down. Neckline. And we're up to the top. Okay. Now there's been some nice, yes, awesome examples, slanted examples of this. On the Dow, I think it was, and we'll have a look at the all share, if I'm not mistaken. Okay. Yes.
So you know you said that with the double top, it doesn't have to be completely straight.
Yeah.
Where do you stop saying it's no longer double top and it might become a head and shoulder?
I think if it's less than half, it doesn't count.
Okay.
So if the first one is less than half of the other one, doesn't count. Or second one is less than half. Although, yeah, I'll need to qualify that a little bit later. Certainly the first one compared to the second one. If the first one is half of what the second one is, wouldn't qualify, yeah. What else have we got? Flags and channels. Okay, channels are fairly easy, right? You have a move up like that. What happens? Sideways. Where do you think we're going to go from there? Could go either way, right? Yeah. Okay. That's like a flag. You see it's waving in the wind. Okay. You also get pennants. Where are we going to go from there? Okay. There's one of these on the decks.
And that compared to a symmetrical triangle?
Same
Symmetrical
story.
triangle is the same story.
Yeah. Symmetrical triangle is simply something like this. Tops are the same. Lows are higher.
Yeah. And then, but then.
Sorry, that's an ascending triangle. Beg your pardon.
Yeah, because it's
Ascending
pointing
triangle.
upwards.
Yeah,
Yeah.
yeah.
But the
Symmetrical triangle is usually something like this.
Yeah, falls into the range. But then you don't know which way it could go either way, or.
There are ways we can try and qualify it, okay? There are ways that we can try and validate which way. And that's using divergence. Okay. That's a little bit ahead there. Ascending, descending, yeah. Triangle's covered. Pretty much. Does the same stuff work in reverse?
Yeah.
Yeah, I'm sure, eh?
Yes.
Come on, put money on the table. $100. Can the same stuff work?
Yes.
No, but we have
Jason's
to
got it. Sorry, Buzo, you missed out.
We have to prove it.
Exactly the same stuff works in reverse, okay? Harder to identify, because why?
It's in reverse.
No. Yes, okay, we'll give you that one, Jason. Come on, dude, come on. Work a little harder. Are we looking for buys or sells generally? What are we, as traders, what are we looking for? We're bulls. So basically what happens is we're taking our, what we call our schemata, okay? Our frame of reference And all we're looking at is like having a blinker in the middle of your face here. You're only looking for the bull signals. You're hardly ever looking for the bear signals. So you're not going to notice them, hopefully until now. Okay, or after now. Alright, so let's have a look at some quick examples. There's a double top. Okay, can you see it? Alright, and that was 5%. Doesn't sound like a lot, but if you can bank it, bank a lot more than 5%. There was the target for 5%, 4.86. Okay? Went much further than that. And that's a drop of, because you would have been in on the neckline, you should have been in on that candle there. It was probably the 29th of July. And that's roughly at 1300. Okay? Taking some trader poetic license here. 1300. A minimum drop to about where the black line is 1235, 65 points. Thank you very much. Right, but actual drop was 1120. That's money. Okay, that's having your own printing press there in the garage in the backyard. Okay, just go say, okay, I want 100 copies today of 100 Rand notes. Oof, go. Okay. There's some more graphical. Okay. Just in summary, left shoulder head, right shoulder neckline. See, it's a little bit lopsided. Okay. Usually, what can also happen is you have a break. Okay, it's important that you actually see this. You have a break, and then there's a retracement, a very small retracement, usually. And what we tend to do in that situation is like, damn it, things reversing, it's not working. It didn't run its full target, and now it's reversing. Okay. Hold the horses, because what can happen is that it just goes back up to the neck line as resistance, and then it crumbles. Okay, it just falls out of bed. All right. So make sure that if you're putting stop losses in, it's got to be above the neckline. Okay. Sometimes it can break but close below as long as it's closing below the neckline, you're good. Okay. Why would it do that? Why would the market try and do that?
Well, because the support becomes a resistance, so it's trying to break through.
Yeah. Well, it's trying to test the resistance.
Yeah,
Right?
trying
to test the resistance. At the same time, some fund managers sitting there and saying, "Yes, this, I'm holding the wrong stock right now. How do I get out of this thing and reverse my position?" Yeah. So what happens is they could do this kind of thing. Okay, it happens. The market gets run up, they sell out there at the neckline, close their position and reverse, and that's when you see that particular stock or chart fall out of bed. Poof. Okay. Just don't get spooked out of a trade like that. Go ahead.
Does this technical analysis in general, it's a worldwide thing? Has it been proven across all markets?
Oh, pretty much, yeah. That's what I say, it's market psychology.
Yeah. No, I'm just checking that as a big difference.
No, this is stuff you can check anywhere in the world. What do you see there? What's going on there? Yeah, thanks. Reading between the lines there, excellent. But what's this here?
Head and shoulders.
Head and shoulders. Right. It's not quite at the top. I would have preferred it to be at the top, okay, at a high or after a rally. But it worked. Head and shoulders. Target was, let's say, 1.3 to 1.35. This is the euro dollar. How many pips is that? It's 300 pips. Okay, if you're betting $1 a pip, that's $3,000. Dollars. Potential downside in that trade. Eh? So the neckline, we draw to the neckline 1.3. The high was 1.3. Yeah, actually it was 500 pips. Beg your pardon. 500 pips. Because the low there is 1.3, not 1.32. 1.35 is the highest. 500 pips from 1.3. Target 1.25, right? It rallied down to 1.23. I mean, that's $5,000. Okay, in And you see how it came down to the neckline, tested it down, had that little upside. You see that? What I was just showed you now. And then it broke. Okay? And you see those moving averages, they all cross each other. That's my entry point. Okay. That's that power move I was telling you guys earlier on about. Your MACD also crossed at the same time. Of course it would. But what I want is, if you have that all together, it's a 10 out of 10 type trade. Okay? It's a 95% success rate. Plus you know your targets are roughly 500 points. I mean, you're just writing your own check here. And it went all the way down to 1.23. So even extended further than 1.25. That's $7,000 in the bag in a month. Thank you very much. My principle is that we can get you 250 points a week on average over a period of a month. 1,000 points is what I'm looking for. Okay? And to me it doesn't matter how many contracts you're using. That's not important. Yeah, it doesn't matter. You don't want to use more than 8 because of liquidity. Okay, 5 would be the ideal. But you don't want to use more than 8. And if I can get you 250 points a week on average consistently, you write yourself a check at the end of the month. 8 to 9 months of the year. The business plan runs over 2 years. So you're trading Woolsey the first 6 months, building up your kitty. At the end of 6 months, you've got an opportunity to withdraw, if you like, and then you're trading on your original money. Okay? Or you have the option of starting to trade single stock futures then as an additional income stream, just like a business.
And if you don't want to day trade and you want to, let's say, like go on weekend analyze and buy on the Monday morning, what kind of like return do you think is, like you want to
At least, generally speaking, I would say about 9-10 months of the year, you should be able to get 10% a month. I think I'm conservative,
When you say
but
percent,
I'm not going to overpromise you.
when you mean percent,
Okay.
should you say points?
10% return. No,
And
10% return.
Oh, so
How, by
So
leverage,
if you
based on arbitrary market.
well, ideally, in your instance, then you're probably looking at single stocks, CFDs.
okay. It's nothing.
You can do the Aussie, but
So how would you get the question?
yeah, for the margin, you could take out a lot more single stock futures or CFDs, and then you spread a little bit of the volatility. Okay, right. Let's continue because I think our 15 minutes has gone down to 3. All right. So divergence. I think out of everything today, if you guys can just get these things, okay, it's going to improve your trading threefold at least. Right. You can use any of the oscillators and things that I've shown you pretty much this morning. All right. It doesn't matter which one you're using. The idea is that we've got to look at highs and lows. That's the most important thing. Now there's 4 different types of divergences. Okay? 2 of them are bullish, 2 of them are bearish. 2 of them are reversals in opposite. The one's a bearish reversal and a bullish reversal, and the other one is a continuation, positive, bearish, and bullish. Okay? So let's just cover the easiest ones first, because it's the continuation pattern that normally confuses people. All right? We're looking at highs. What do we expect if we're looking at the highs? If we're talking about reversals, what are we talking about if we're looking at highs?
It's going to change.
Change where?
It's going to go down.
From high to low. Okay, we want a reversal. Market's been moving up, reaches a high, and then we want to know if there's a reversal. Like you were talking about earlier on, Jason, when we were talking about what happens if there's a double top and then it just carries on going. Okay? So what we're going to do is we're going to talk about the highs, and simply put, we want it to reverse, right? Because we're looking at the highs. So if this is the stock, what are the highs doing there? Higher high. Okay? It's making a higher high. Alright, that's the stock. And this is your indicator. Doesn't matter what indicator it is really. What's going to happen on the indicator? What's wrong? Oh, you want to get it in the picture? Is the chair not in the way?
No.
I'll move the chair out a little bit. Okay. Remember, we're looking at the highs, eh? So the high, we're showing a high there. That high is above that high, right? What do you think is going to happen on the indicator? Same thing. We're looking for divergence, eh? Which means opposite.
So the indicator will go the other way.
How?
Well, if the stock's going up, the indicator's going to start going down.
Okay, but on the highs, right?
Yeah.
So what's going to happen is you're going to get a situation like this. Let me just get this right. You see that?
Momentum isn't following.
Momentum is disagreeing. It's diverging from what's happening on the chart. Okay, so there's your highs there. So that high is below that high is above that high. So we're looking at the highs, and they don't match. Okay, so the opposite. That's a reversal. That's bearish reversal.
Just a question, because I've been reading up on these indicators. Often they don't work. So, I mean, not often, but I'm saying there are times that they don't work, for example,
Sure.
depending on the price nature. But now, if you see this and it dips and it's back up, you say, like, how often is it true? If you know what I mean? Like, if, for example, the price did dip, but then it kept on going up.
Yeah, but then that won't fall, man.
Wouldn't it?
No.
Okay, yeah, that's what
Because that
I'm
would
doing now.
continue up.
Okay.
Okay, in most cases.
Mm.
Look, none of this stuff's gonna. The thing
Yeah.
about technicals is that it never works 100% of the time. Okay. What do we want? What do we want? What is your
51%.
fail-safe point? Where are you prepared to put money in or not?
To beat inflation.
No.
As long as you're right more times, correct more times than you're wrong.
Well, ideally, yeah. But you know that there's forex computers, okay, that have automated trading systems plugged into them, okay, because they have no emotions. You know? How often do they get it right, percentage-wise? How often do you think they get it right? 45% of the time. Do they still make money? Yeah. Why? Because when they're making money, they make more money than when they're losing money. Done deal. But can you and I handle a 45% losing rate? Every time you trade, you're not sure if this one, it's like flipping a coin. You're not sure if this time is going to be the one you lose or the next time. I don't know. I can't handle that too much, eh? Yeah, no. Yeah, no, I wouldn't last very long with that. I'd be grey overnight. Okay? So what we're looking for, guys, is we're just looking to up the ante. We don't want a 45% success rate, okay? We want to up it to about 75, 80%. Right. And then it's about risk management. How much are you prepared to put on the table for the particular return on investment? And what are you prepared to lose if it doesn't go your way? Stop loss. Okay? So if this is a bearish reversal, okay? Okay, so this is a positive reversal. You get the opposite. Now how does the opposite work?
So if the share's going down, the indicator's going up.
How's the positive reversal work?
Lower lows.
Okay, so we're looking for lows now, eh? Because we want the share to reverse up. So let's split it. So higher lows, right? Happy? That low is above that low. Okay? The indicator is going to do the opposite. Okay.
This is the continuation.
Well, usually you don't get that one easily.
Yeah, it's not very, it's seldomly seen, but it does. Obviously, you must remember, hold on a sec, remember the bull bias I talked about earlier. Johannes, take away the blinker here. They happen all the time. This happens all the time. You're just not looking at it.
Yeah.
Okay. I'm honest with you, it's happening all the time.
Yeah.
But if we're in a bullish market, you're not going to see it that often. Yeah,
Yeah.
given.
Yeah.
But they happen all the time. Just as much as that happens.
Yes.
Okay?
Is this a reversal or continuation?
That's also a reversal. Because it's been going down.
Yeah.
Okay, we make a low, which is lower than the next one. So that's low. That low is above that low. That low is below that low. That's a reversal.
Okay.
Okay, so which one wins in this case? The stock or the indicator?
The stock. If the stock's an upward trend, the indicator's on downward.
No, the indicator in this case wins.
Mm.
Okay? The indicator wins, the momentum is lower. Okay?
Yeah.
So the indicator is falling, stock follows.
But in the bottom one, it's the other way around.
Yeah. Right?
Psychology behind it is price didn't follow the momentum.
Okay, hang on a second, I'm getting myself confused here. I've swapped those around. I've swapped these around, sorry guys.
Yeah, because you'd have to have lower lows before
Yeah.
the
I've swapped
upturn.
these around, sorry.
Okay, cool.
Okay. Glad you spotted that. Alright, so let's try that again. This is making a lower low. That's making a higher low. There we are.
Yeah.
Okay, so the indicator is winning because it's making a higher low. So the stock follows what the indicator is doing. Okay. So those two are reversal patterns. That's your bearish reversal, that's your bullish reversal. Okay? Whatever the indicator is doing, if it's making higher lows and the chart's making lower lows, indicator wins. The momentum is going to increase. Momentum is increasing, so the stock will increase. Okay? Now there's another one, another set, which is the reversal, a continuation pattern. Okay? Now just think. Now this one is going to be, we're looking at the highs. Alright, that's the stock. Now this is a continuation pattern, so we're already bearish, right? What's going to happen to the indicator? Okay, it's showing that momentum's increasing as the stock's coming down. Right? So that high is above that high, that high is below that high. It shows us that the continuation is going to continue. That's funny. The rally is going to continue. Okay, the downward rally is going to continue. And in terms of how, Jason, your question earlier on, how do you know if it's just a small pullback or if it's a proper correction? Is the opposite of this. Okay? So just think we're looking at lows now. This is going to be the highs. And this is reversal, continuation. And that's bearish. Now what's going to happen? So this is the stock. We're looking at the lows, What's going to happen on the indicator? We're going to make lower. No. So we're making, this is your positive continuation. So between that one and that one, that little pullback there, to determine if that's going to be a proper pullback or correction, or just a little one, you want to see if the MACD, or whatever it is, the stochastic that you're using is making lower lows, where this is making higher lows. Okay, that's a continuation, it's a bearish continuation. Bullish. Okay, it's a little bit difficult to comprehend this stuff. If you guys haven't seen it before, it is quite complicated, okay? Especially the continuation patterns. But hopefully now, if I can show you a couple of examples. Okay. There's some simple examples here. So that's the price, and that's the indicator. What are they doing?
The price is going down, the indicator is going up, so the downward momentum.
That's the divergence, right? So downward momentum is doing what? It's slowing down. Okay. So the idea is that now you just got to wait for timing to get in. Okay. Which one is that? That's a reversal, right?
Yeah.
Stock's moving low, lower, lower, lower.
But the
indicator is turning up. Positive reversal.
So the indicator is not measuring physical momentum; it's measuring the direction of the momentum.
That's the thing. And you want the in the case of a positive change, positive reversal, you want the momentum to be moving up, increasing. Okay. Then it's just a matter of timing. Negative divergence is exactly the opposite. If we're looking from highs, because it's negative, we want it to show us when the downside is going to come. Negative divergence predicts that there will be a fall in the price of a share. So we want higher tops on the price, lower tops on the indicator. Here's a couple of examples. Right, this is PPC. What's happening here? Is that high above that high?
Yeah.
Okay, what's happening on the indicator? This is the MACD. That high? Which one is it? Yeah. Positive or negative?
Because the momentum's going down, that high is not going to hold and it's going to drop.
Correct. It's negative divergence. Okay. Because the momentum, or the indicator wins. It's telling you that the momentum is not as strong as it was in the previous high, so the stock is likely to fall. And I mean, look at that. Plus you had a double top. I mean, it was a no-brainer. Top, neckline, and there's my little retracement. Remember I told you it was about the pullback to resistance? If we draw a neckline in there, okay, little test of resistance, and goodbye dolly.
Just one more question.
You see how it all works? Sorry, Jason, you see how that can all work as a combination of things?
Yeah. Sorry for butting it. What I wanted to say was your MACD is it is a 2612
It's a standard 2612 now. Why do you want to go? You don't want to change what Big Brother's using. No, good question. But some people like to play, you know. Just use what Big Brother's using, because he's the Springbok here. You know, he's not Greek was. Okay. All right.
Carry on. So it seems like there's four combinations. So
awful.
Higher highs on the stock indicator, higher highs, and on the one and lower highs on the other means that the indicator is going to show, right? I'm saying
reversals.
So
those are all reversals.
What, when it relates to?
When it's both the highs and both the lows, it's reversals.
Okay, and then when's it contrarian? Yes. Continuation. Sorry, continuation.
Okay. So this is a continuation. Sorry, it's also the same. It's also on the highs and the lows. But remember, the one is higher high, and you wanted to see a fall.
Cool.
The other one is a lower high, and you want to see a continuation. You want to find out if the thing with this little bounce here, with that little bounce there, is it just that it went there and now it's going to go back up and continue going up forever, or is it just simply a little bit of a test of resistance?
Okay.
So this is showing you. Sorry, but this is showing you it's a lower high. Is going to show you a continuation pattern. Is this going to be a new trend now? Okay.
Okay.
Or is it just gonna, it's dropped, it's done its correction, now it's gonna carry on going higher?
And how's this different from reversals? I'm still confused between.
Okay, remember the highs.
Yeah.
Remember the highs.
Okay.
Okay. What are the highs doing here?
Higher high.
Higher high versus lower high.
Okay.
Okay, so let me draw it on here, and we can see, we can compare them. Okay. Remember, here we're looking for a continuation of the trend. Okay. So in this in the other instance, we're looking for a break of the trend. Cookies are dying. See the difference?
Okay.
This is a break of the trend. It's a breakdown. Because momentum's doing what?
It's less going
Momentum's
down.
dropping, yeah.
It's dropping.
Yeah, what's happening with momentum?
It's increasing.
It's continuing, yeah.
It's
Okay.
continuing.
So that's the breakdown. This is the continuation of the trend. Or trend confirmation, if you want to call it that.
And the bottom example.
Bottom example, that is this is a bullish continuation. Okay. Now the reversal is all the lows. Because your momentum is getting shallower or stronger. You've got higher lows there, lower lows there. What is this compared to that one? Downtrend. Yeah. No. This is a downtrend, right? Or this is the uptrend.
That's losing momentum.
Yeah, that's an uptrend losing momentum. And then this side it's a downtrend gaining momentum. It's reversed.
This is a reversal. Okay. So this is a breakup.
I would think it's the other way around. Because
This is a trend continuation, trend confirmation.
But if the bottom is the indicator, right? So the indicator is saying that there's a momentum going downwards. But if the stock's going upwards, it's losing momentum, surely. Do you know what I'm
Yeah.
saying?
Yeah.
The trend's upwards.
Yeah.
The indicator is showing a downward momentum, which means there's a fall in momentum in terms of direction.
Yeah.
So that shouldn't continue the trend. That would pull it down.
No, it's contrarian.
So
It's almost like contradictory, but what's happening is that for an indicator to gain momentum,
yeah,
can it gain momentum better from a high level or a low level?
that just depends. Unless they work in uphill, downhill.
Remember, it's got to have a pullback in the stock.
Mm.
Okay, so it's making a higher low,
Yeah.
but you want the indicator to have really have pulled back to give it another go on the upside.
Okay.
Okay, does that make sense?
So we're
Yeah.
not applying the same logic for both the
Yeah,
continuations. In the one case we're saying, in the top left, I'm just talking top left and bottom left. So for top left we're saying indicator is strengthening, and therefore that means that the stock price will continue because the momentum is increasing. In the bottom left we're saying the indicator is weakening, and therefore the stock is going to continue in the direction. We're not applying the same.
Yeah, I know, but that's how it works.
But then it's not a method.
No, in this case, it's contrarian to the continuation pattern up here. Okay, but basically what is happening here is that it's trying to build momentum on the upside by losing momentum first. Okay, before it carries on going.
So when we
Okay.
refer to as the swing is coiling.
Yeah,
we refer
we're
to
winding,
Okay.
and then it's gonna shoot.
So
It's
now,
gonna
if
release.
you had that bottom indicator, okay, we'll chat after. Sorry, just wasted.
Yeah, no, it's good. If you don't ask the questions, you guys aren't gonna be able to get it to settle. Okay, it's an excellent question because a lot of folks battle with this. A lot of people battle with it. I battled with it. I mean, I just had the example wrong on the board there just now. Okay. Okay, so positive divergence. The normal, what they call normal divergence, is this one and that one. So these two here are called normal divergence if you want to Google it. Okay. This one over here is called hidden divergence, and it's usually the one that everybody misses because it isn't. It's not natural. Okay, it's not a natural expectation. Okay. If you just have a look here, what is this? What's happening over here? I'm going to show you examples, so hopefully then from the example perspective we can see the differences. What's happening on that chart there?
It's a breakout.
We've had a nice downward movement.
Breakout.
We've had a naked down bullish movement, and then the next minute what happens?
The momentum turns up and that starts.
Yeah. Okay, so you've got a lower low on the chart, on the price, higher on the indicator, telling you momentum's changing. What's going to happen after that? Usually, you have a reversal, right?
Yeah.
Okay.
Just one more thing, just a broad question. How prevalent are these in the market? Relatively, I mean, like, if I were to go look,
Yeah, you
if
find
the
them
next,
often
I'll find
enough,
them in the next 2 weeks.
I'm going to show you, hopefully we have enough time to show you some recent ones. So this is the reverse divergence, okay, or the hidden divergence. Okay, it's also known as hidden divergence, shows continuation of the trend. The negative divergence will be found in a downtrend. That's the important thing. Okay, because why? It's a trend. You want to know if the thing's going to, is it going to reverse, or is it continuing when it has that up spike? Okay. Positive reverse divergence is in a uptrend. All right. So we're looking at exactly the opposite of the negative divergence. We're looking for lower highs on the price and higher highs on the indicator. The stuff's in the chart, so I'm going to just move on. It's in the PDF, so I'm going to move on so you guys can see examples. Okay, so would you say that this chart's trending up or down?
Down.
Down. Are we in a trend? Are we in agreement that that's a trend?
Yeah.
Okay, so how do we know that there is not going to continue up?
Oh, because the.
We toss a coin.
No. But the line cut through the.
What's
because
going
that's
on
the
there?
MACD, the signal line cut through the MACD. Or the MACD cut through the signal line.
Momentum's going up.
Okay, so the momentum's increasing, right?
Yeah.
Because between that high and that high, the momentum has jumped tremendously. Okay, but if we look at the chart, it hasn't said the same thing. That's divergence, opposite, right? So what does that tell me about this particular chart? What do you think is going to happen? Of the
Downward
trend.
Oh, okay, yeah.
Okay,
When it goes down, that one
because
is
it's building momentum, building momentum, and that momentum is much higher than the momentum that happened over here. So when that thing starts turning down, that stock's going to just fall out of bed. And that's what happened. If you went short over here, it's about 300 points. What is this? It's the J150, it's called JC Gold. Let's just see if we've got some more examples. Okay, this is the positive divergence. Okay, so obviously this is now where you want. What's a trend doing? Sorry?
Continue. Trend.
Which way?
Down.
It's up.
Positive. We want positive trend. Okay, because it's positive divergence.
That's what the one we just saw.
The one we just saw was negative, right? This one's positive. So what do we want the trend to be doing? Okay? I'm just gonna. Okay, I don't have an example in here. See if I can find one quickly. We want a positive trend there. Bullish trend. Yes. Oh! I don't like that trend. Positive, eh?
Yeah.
Okay. And tell me something. We're happy that the trend's going along, but we're sitting over here. Okay, that's just happened. We're still in the trade, right? Because as far as I'm concerned, it hasn't broken my black line there, which is the 20 EMA, 50 EMA, 50 EMA. Okay. See how it came back to test it. Hooah! My 50 EMA acted as support. Remember I told you guys about that earlier on. Thank you very much. tested it to literally within a couple of points, okay? Tested it, it continues going higher. That pullback over there, however, during the day broke my 50 EMA. Now, how can I suspect, how do I get an idea if it's a proper break now, or if it's just going to be a pullback? When my trend is going, I then look at the MACD, and what is it telling me? If I look at those lows, and I look at the MACD lows, what's happening?
Going down.
They're going lower.
Yeah, they're going
The lows are lower. Is that what you're saying?
Because I'm seeing
Yeah,
that over
yeah.
there. That low is lower
Yeah,
than
it's
that.
lower.
That
This
one
low,
is
yeah.
lower than
This low, yeah,
down. It's low.
that.
is lower than that low.
Yes.
That low,
It's higher than that.
It's higher.
continuation pattern. Thank you very much.
So that means
Okay.
continuation is, if it's going up, the MACD, it must go down.
Correct.
Okay.
It must diverge.
So which low is lower than which low?
That low there,
Yeah.
the blue line, is lower than that one. Not by much, but it is. And that low is above that low. It's a continuation pattern. Okay, it is a little bit, it's sort of contrarian, okay? It's kind of like, it's the difficult one to get. That's why people call it the hidden divergence, because it's hidden to most people. They don't quite usually understand it, okay? But there's an exact example. Now, look at this one. What's happening in the next downs? There's another two lows up there. The next two lows. This low and that low. What's happening there?
It's just changed.
Has it changed?
No, it hasn't. No, it's still a higher
We-
low than the previous one.
That
Still
low
higher than
is
that.
higher, eh?
Yeah.
Right?
But the
And this
MACD,
low? What's happening there?
it's far lower.
Lower than that low.
Yes.
What happened?
Okay.
It went up.
Continuation.
Continuation.
Not by much. It went a little bit higher than the previous high, but hey, if you were watching this and you traded on that, traded over there at 1,620, it was 80 points up.
So that means
And
if
even
I,
it happened again. Oh, sorry.
if I look at this properly, for there to be a reversal, our MACD must change. Our MACD must change in terms of its momentum. For there to be, like, for you to identify that a reversal is coming.
Yes. The MACD should be opposite to what's happening in the stock. Okay? Remember it's this one here. You're looking at the highs, and the stock's high must be higher than the previous, the first high must be higher than the previous high, but the indicator's high will be lower, showing you the momentum is going to reverse. Okay? And the same with the positive one. Momentum is now reversing.
Yeah.
Right, I'm going to show you some examples of that now too.
Okay. So that.
There's actually one on the chart.
Yeah.
There's actually one on the chart. Right? So to your very question, what's happening with that high and that high?
They're higher. Like the
What's
one.
happening with those two highs?
They're lower.
What happened to the chart?
Is-
Small. It's a very small effect,
Small effect.
but that's about 60 points. Okay, so they're all over the place. It's just being able to recognize them. Right, and then we've just had another one.
Incoming.
That low there,
Incoming.
and that low there, and that low there, and that low there. You see those? And that means that you have a continuation pattern. Let's see. Overbought, oversold. Okay, I think that's fairly straightforward. I'm just going to run through a couple of these quickly. We're almost finished. We're in the dying. Overbought, oversold. If that's your chart, and this is your indicator, OBOS, overbought and oversold will do something like that. Pretty much, if you're down in this level, you're oversold. Right? That level, overbought.
And
Easy
the
peasy.
balance volume.
On balance volume is slightly different. The
Yeah.
last thing about it is that if you want to know about volume, because what can volume determine? What can volume tell you?
Investor sentiment.
Yeah, what the market's doing, right?
Yeah, where they go.
If the market's buying or selling at critical points where resistance is support. Okay? So what usually happens is that, let's say you start with a value of 10,000. That's day one. Day two, the stock closes 1 rand up. Okay? And on that day, there was 5,000 shares traded. What happens? We started with a volume of, a straight volume of 10,000. What happens on that day? We closed up. You add the 5,000 volume to the 10,000. That day, the volume is now 15,000.
Yeah.
Okay, on balance volume. So if it closes up, the volume traded on the day gets added to the previous day's volume. If it closes below,
it gets subtracted.
Deducted.
So that's
okay, so if you have a number of days, that's day 2, day 3 is plus 3,000, day 4 is plus 7,000. What's going to end up happening? Day 3 will be 18,000, right? Day 4 will be 25,000. So your on-balance volume looks something like that.
Okay, so it's essentially just another trend weighted by investor sentiment.
By volume.
Yeah.
Actual volume traded. Okay. Yeah. It's a good indicator. I don't really use it anymore because I just check candles. The candles tell me much more than what any other indicator can tell me. There's the on-balance volume. Okay. We're in the final stretch, guys. Is that okay?
How long?
Like 3 minutes?
Fine.
Is that alright?
Fine.
Awesome. Have a smoke break, coffee. Don't double clutch or anything. Right, Elliot, this is how it all works together. Alright, so, and really I'm giving you the 60-second Elliot wave lesson here, okay? There's the chart. Elliot's work this way, they work. Personally, I think Elliot didn't really do it this way. He didn't have a bearish cycle per se. I follow that there is a bearish cycle, or that there can be a bearish Elliott wave cycle. Okay. And how it works? So usually you have a bullish wave cycle works in 5s. Okay. The odds are ups, the evens are downs. That makes sense? 1, 2, 3, 4, 5. This is how it looks. So you draw a horizontal line along what the first top is, then that you would mark, and this is usually after a downtrend like this. So a downtrend like that, there's the first wave. Pulls back, usually 61%. Up, that's usually 161%. Sometimes 138. Pulls back, and up you go to wave. What wave is this? Huh?
5.
No. 3. There's 2. Which one's this?
4.
And then up here? 5. Okay? So this one doesn't count. That's kind of like ground zero, okay? It doesn't count. Usually most traders miss this one because we're not sure if it's a reversal. So what are we looking for? What are we looking for in divergence?
Continuation or reversal?
Yeah, reversal pattern, okay? So we're looking for a reversal pattern. Alright. So usually it's wave 1, 2, 3, and 4, and usually that pullback there is 61% of this one here. Okay? Usually. Sometimes it's only 38. And there's various numbers, we're going to talk about the numbers just now. They're magic numbers, okay? Or if you don't like the phrase magic, there are golden ratio numbers. No, literally, that's what they're called. Okay, and pi, you guys understand pi? You've heard of pi before? This is where pi comes from. Okay, scientific numbers. It's not pie in the sky stuff. Alright, so it's wave 1, wave 2 is a pullback of 38 to 61%. Wave 3 is usually if we take the high of that level and we go, it's 138 or 161 is the high there. Wave 3, where is the pullback going to be? Repeat. Either it's a repeat of the previous wave 2, or it can be extended further or less. So if this one was 38%, this one could be 61. If this one was 61%, that one could be 38. Does that make sense? And then the last one is usually, again, on average between a 138, 161. In some cases, I've seen stuff go to 261. Okay? And in very rare cases, you see stuff go to 423%. Okay, of the previous move. which is up there somewhere.
Then the pain is good.
Yeah, this is the part that's going. We all want is loss.
Greatness bears.
In a nutshell, that's my 60-second talk about Elliott wave cycle. However, what can happen in this, in part of this thing here, is, and that's the thing, is that Elliott wave is quite fractional. What I mean by fractional is that it's like an accordion. You can open it as much as you like, these cycles, 1 to 5, or you can close it as much as you like. Okay? So what can happen is that this entire thing here that you see could be a wave 1 of a much bigger wave, like a tsunami wave. This is the little ripple that came before. Okay, can you guys with me on that? Okay? So what can happen is between wave 2 and wave 3, you can even have a situation in between there that goes something like this. So that'll be 1, 2, 3, 4. And you've seen this happen time and time again throughout the market. It doesn't just go up in a straight line. It has these lekker little cycles that happen, and you wonder, like, why is it pulling back today? And all of a sudden, the next day, it's off again. Okay? Elliott wave cycle. Okay? What usually can happen after wave 5 is that you have an ABC. So this is wave 5. There it is. Usually you have a down, a slight up, and then a fall out of bed. A, B, C, and very scarcely these days you have what's called a Gartley, okay, which forms a D. Okay, complete reversal. Well, complete back to the wave 5. Okay. Alright, so you get a picture from it over here. You've got to wait for the breakout over there. It's going to rally usually 138% of the previous move, or up to 161%. Okay. The opposite can happen, and there's my example. This is the J to a 3. It's all shape. Okay. We had a nice little up rally. You can see my trend lines in there. Breaks the trend line. Wave 1 down, wave 2 up, wave 3 down, wave 4 up, wave 5 down, and just about past 150%, but not quite 161%.
Do you measure the closing prices or the
Easy peasy. No, I just measure what looks like the pattern. Okay.
Okay.
There's the high of 0, ground level 0. It's the resistance. First breakdown now. I wouldn't have got the first breakdown. Wait for the second one. Is it confirmed? Third one comes down. This is the play. Wave 4 is the play for me in this case. Okay? Because I wanted to wait for confirmation of it hitting this trend line there, getting to a wave 4 potential, and the next day you see where it opened up, way below the moving averages. Okay? And where was it going to, even if I only got in that day, where was it going to go? I put in my Fibonacci, and it's going to go, usually wave 4, 5 is below wave 3, and my target was 161%, give or take. So even if you only got in there, it's 440, it's 39,440. At the lows here it was 37,950. And that's over 1,000 points, man. Come on. Okay. That's phenomenal. Alright. Fibonacci, okay, Fibonacci, do you guys, anybody know about Fibonacci?
Yeah.
Okay. So this is in the notes, so I'm not going to go too much into it, but there's the magic numbers called the golden ratio, okay, and pi. What it is the rabbit story. Have you heard about the rabbit story? Anybody read about Fibonacci before? Fibonacci actually was an oak who exists. It's not just a lovely name, it's just somebody decided to say it sounded like in Italian. Okay? There was a king, and he said he loved going horse riding, and what ends up happening is that there were too many rabbits shitting all over the place. Okay, let's put it that way. Lots of droppings all over the place. So what ends up happening is the king says to his main honcho advisor, he says, listen man, sort this problem out with these rabbits. Why are they breeding so many? And he does some calculations and he figures, right, if you take, how long is it going to take you to breed a number of rabbits over a period of time? You take 1, you only have 1 rabbit. You take 2, what happens? The next minute you've got 3. And he worked out a matrix basically according to these figures. 0, 1, 1 and 2, 2 and 3, 3 and 5. And how it works is you add the previous number to the current number, to the result, and you get those numbers there. Important numbers, 3. That's my moving average. Important number 8. It's one of my averages. Okay, 21, 20 is arguable. I use 20. Okay, 55, 50, arguable. It's in there. 89, thank you, well done. Spotted. Right, and so it carries on. Now, there's a converse or an other side of this, which is the pi side, which is by you take one of the numbers ahead and divide it by the previous number, and you get other ratios. Okay? And these are the ratios of pi, basically. Okay, well, this number is 0.618 up to the end, and this is what you end up with: 38%, 23%, and so you get bigger and smaller ones, 61%, etc. And eventually what will end up happening is you get the 120s and the 138s, depending on which ones you divide and which ones. And that's how we get the levels that we're talking about. The magic number levels are, as I've said already, usually 23, not very often used, 38, 61, and then you get about 89 or so as well, but that's very seldomly used. 88. And then the other side is your 130, 138, 161. You get a 200 obviously, and then you start getting 238, 261, and then you start looking at closing your position. Okay, taking the profits and walking away. Okay, so those are the magic numbers we're looking at, and there they are there on the screen as well. Yeah, there's the 423 that I was talking about. Okay, so how does it work? I'm not sure if you guys can make out this example, but there's an A, B, C. You see it? A, B, C, downside. Wave. Usually what Elliott Wave talked about was 5 waves up, 3 waves down. Okay, so I take my Fibonacci and I put it at point A, which is the low in this case, because I want to see the downside, further downside coming. So I put it at the low, drag it to the high, and I let go. And Fibonacci, you should have it on your charting system. It then plots all the levels from there down. Okay? And you can see that it hit 161. It actually went even further than 161. It actually almost basically went to 238. Okay. So, chain lines, I think you guys know about chain lines. Okay, that, highs and lows, you know about those. Okay.
Hi guys.
Hi.
Hello. How are
Hey,
you?
how are you?
Fine, thanks. Nice to see you all pitched. Hi, I'm Juliet.
Hi, Juliet.
Lovely
Good
to
to meet
meet
you.
you.
Yes,
I'm going to make a
likewise.
quick cup of tea.
Please, I just want to show the guys one or two examples now that we've officially
Good.
finished. Let me just show you. I want to show you something I figured on the rand, okay? Okay, it's a lot of stuff going on here. But give you some practical examples of if you wanted to trade the rand, what's happening here. We're going to incorporate a lot of things in now, okay? Okay, higher highs, lower highs, sell the rand. Booyah, score. Okay? What else is happening? I use the Fibonacci to decide in that down cycle there, where's the next up cycle potential. When it crossed back up over there, it hit 127, which wasn't a hell of a lot, it was about 18 cents. So you're just paying the broker, okay? But it still went to 127. Okay, we come down, we've got a nice trend. Here's a couple of pullbacks here. And if I'm not mistaken, what's that? Trend is actually up, okay? Or against the rand, trend is up. That low is above that low is below that low. What's going to happen? Continuation. And did it continue. And I was on CNBC when this was happening, and I said, I think Ian Cruikshank thought it was actually there. And he said to me afterwards, do you really think the rand's going to go above 10? I'm like, yes. Anyway, so I said if it goes above what, 9.40, we're in deep shit. Sorry. Yeah. X that out of the But you see there where I put power move. I don't know if can you make that out there?
Yeah.
It's there, okay, power move. Okay, what's happening there? Chart's going something like this. In the next minute, we've got basically 1, I don't agree, 2, and 3 moving averages crossing up our move. And I mean, check it go. That was from 9.18 to my 2009 target high. That's part of resistance and knowing your history in your charts. You go back on a weekly chart and you see where are the levels that you could break or find resistance. 2009, and it hit it to the T, man. I mean, it was to the cent. And here's the one. $10.65. You see my 423% there? I don't know if I can make this up, but there's a 423% there at 10.63, and a whole bunch of others. Anyway, the point is that historical stuff, you have to know what your history, what's going on in the history. Some shooting stars, see those? Look at this shooting star here. That's actually an evening star. It didn't move down by much, but it moved. Let's have a look at Platts. Platinum sector. What can you tell me about a reversal there? Did you guys, if you guys were looking at the chart and you saw that, what do you think is going to happen over the next couple of weeks?
So there's a higher, the price has got a lower low as you go down, but the moving average has got a higher low, so it should reverse.
No, not the moving average.
I mean the MACD.
Indicator, right?
Yeah, sorry, I meant the
indicator.
yeah.
So there it is, lower low. And what's the trend? Down. Higher low. It shouldn't be happening if that trend was going to continue. So there was the reversal, and there we're at 38 to 40. And let's have a look. Ka-ching. Thank you very much. And this is again why I was on earlier on this year, CNBC, I said, don't be in gold, you should be shorting gold, but you're going long platinum. Happy. One last thing, because you guys need to decide where the market's putting its money, right? Because you can't short. Okay, price relative. In case we don't have a lot of time to finish. Okay. The way the price relative works is this indicator down here. Okay? Basically what it does is I've paired it, I've compared it to the J203, which is what? All share, right? All of everything in one basket put together with a 20-day moving average. Right? Now where the blue line is, that's the performance of the stock or instrument at the top. Where the red line is, that's the mean for the JC All Share. Right, so along this point over here, where's the blue line?
Underperforming.
Underperforming the market. This particular stock is underperforming, or sector in this case. So do you want to be in the sector?
No.
The moment it starts giving us, it told us that there was a reversal coming, but we weren't too sure when it was going to happen, right? So you can use indicators to time the market, look at the stochastic when it crosses, moving averages when they cross. But I very much like to know when the sector or the stock itself starts outperforming the market. Because guess what's going to happen? If I'm seeing that, so are all the fund managers. Okay? And even if I'm a couple of days late, I get in at whatever. I mean, if we go to, we'll probably deal with implants or something like that. Or angler plants. Okay, there you go. And you want a chart to talk about resistance and support. How about this one? So you get these levels. Support, support, support. Rallies a little bit, resistance again, support, support, breaks. Breaks out a little bit of resistance, breaks to hell, right back at resistance and it's broken out. That's what I was talking about this week now. And check there your reversal. Same as on the sector. Eh? Okay, so one of the things I recently started introducing for my training for trading itself as well is this thing called a snap band. Okay, it's this little band here that I wear now all the time. If I'm trading and I start thinking about,
can I see the band?
I start talking to myself. That little voice in my head starts telling me, yeah, it looks like a good day on the market today. I think I'm just going to phone my broker and buy something. And how many people do that, right? That's crazy, actually. This little band helps me to avoid that situation. Right, because what ends up happening is the moment I have a thought where I'm not following my trade, I'm just deciding, well, maybe this looks like a good trade, or it looks like the market's moving up. There's voices in my head telling me that it looks like it's a good trade, but the strategy is not confirming, or the strategy is not giving me a trigger or an entry point. You pull and snap. And that's what happens to your voice in your head, okay? It gets a slap.
It's powerful.
All right. And I'll tell you what, it's powerful, all right? Because the moment, and it can't be a weak little, oh, that's so sore, you know? Oh, shame. It's got to hurt. Okay. And I'll tell you what, it works. Because the voice in your head then starts thinking the next time it does it, or even starts thinking about it, yeah, I'm going to get sore next time. And you're going to avoid the pain. Because there's only two emotions really in life, pleasure, pain. And you do everything to avoid the pain, let's be honest. Okay, even on a subconscious level. All right, I'm going to wrap up. Any questions, guys?
I'm good.
It was a lot to cover, I know, but geez, I usually cover something like this in 2 days, okay? All of the stuff we've done today. Usually done in like a lot more time. All right, well, I'm contactable on emails. You guys have all got my cards, I think.
Yeah.
All right, so give us a shout if you need any help or got any more questions. Thanks a lot for the day, guys. It's been a pleasure to be at Birchwood. It's been a pleasure showing you guys about the technical analysis. And remember that you want to have a mental fund about what's going on in the market, but you don't want to necessarily use fundamentals to time the market. That's what technical analysis is for. All right. And at least now, I think you're going to be able to tell if there's a reversal coming in the market or if there's a continuation coming in the market. It's quite a difficult one to come to grips with at first, but if you're putting together combinations of chart patterns, the reversal patterns and that kind of thing with the candle patterns, with the divergence I've shown you, you guys can't go wrong.